Ever wondered what makes the stock market tick and how you can jump in on the action? Welcome to the mesmerizing world of stocks, where fortunes are made and lost, where dreams are realized and shattered. The stock market is not just a place, it's an ecosystem where buyers and sellers come together to trade stocks, pieces of ownership in a company. A thriving stock market is a sign of a robust economy, as it's here that companies raise money for their ventures and investors earn profits from their investments. It's a place where the heart of capitalism beats, where every trade signifies the faith in human enterprise. In this vast marketplace, there are primarily two types of stocks that you can buy: common and preferred. While common stocks offer voting rights in the company, preferred stocks promise a fixed dividend. Understanding the basics of the stock market is the first step towards successful investing. And we're just getting started. Stay tuned. Now that we know what the stock market is, how do we start investing? Well, the first step is research. It's crucial to understand the company you're investing in. Take a deep dive into the business model, financial statements, and industry trends. Knowledge is power in the world of investing. Next, you'll need to set a budget. Determine how much money you can afford to invest without jeopardizing your financial stability. Remember, only invest money you can afford to lose. This isn't a game of chance, it's a strategic move for your financial future. Once you've done your research and set your budget, you're ready to open a brokerage account. This is your ticket to the stock market. You'll use this account to buy and sell shares of stock. Finally, it's time to buy your first stock. But remember, investing is a marathon, not a sprint. It's about the long game, not overnight success. Investing in the stock market is not a get-rich-quick scheme. It requires patience and discipline. So, how can you increase your chances of success in the stock market? This is a question that many investors, both seasoned and novices, often ask. It's important to understand that there isn't a one-size-fits-all strategy for success. However, there are a few common strategies that can increase your chances of getting a good return on your investment. Firstly, diversification is key. This is the practice of spreading your investments across a variety of assets to reduce risk. Imagine your investments as a pie. Instead of having one big slice, you have many smaller slices. Each slice represents a different type of investment, such as stocks, bonds, or real estate. This way, if one slice doesn't perform well, you still have other slices that may be doing well to balance things out. Secondly, consider investing for the long term. It's tempting to try and time the market, buying low and selling high. But the truth is, even the most experienced investors find this challenging. Instead, consider buying and holding quality investments over a long period. This strategy allows your investments to potentially recover from short-term market fluctuations and benefit from the power of compound interest. Another strategy is to reinvest your dividends. When a company you've invested in performs well, it might pay out dividends. Instead of cashing out these dividends, consider reinvesting them. This means buying more shares with the dividend money. Over time, this can significantly increase the value of your portfolio. Lastly, regularly monitor your investments. The market is constantly changing, and so should your investment strategy. Regularly review your portfolio to ensure it still aligns with your financial goals. This doesn't mean you should make rash decisions based on short-term market movements. Instead, make calculated adjustments when necessary. Remember, there's no guaranteed formula for success in the stock market. All investments carry some level of risk. However, by diversifying your portfolio, investing for the long term, reinvesting dividends, and regularly monitoring your investments, you can increase your chances of success. Remember, successful investing is not about making the perfect move, but about making consistent, informed decisions. Let's take a moment to recap what we've learned today. We started our journey by understanding the stock market, a dynamic world where businesses and investors meet. We learned that it's not just about buying low and selling high, it's about understanding the fundamentals of the company, the industry, and the economy. We then delved into how to get started with investing. We discussed the importance of starting small, learning the ropes, and gradually building our portfolio. We also emphasized the necessity of a well-diversified portfolio to mitigate risks and enhance potential returns. Next, we explored strategies for successful investing. We talked about the significance of long-term investing, the power of compound interest, and the importance of staying informed and adapting to market changes. But remember, the path to success in the stock market is not a sprint, it's a marathon. With patience, discipline, and a willingness to learn, anyone can become a successful investor in the stock market.